Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading, and you are tuned into our podcast, The Secret War on Cash, where we look at some of the things that have been changing in the world around us, the financial system, our currency system, our markets as a whole. And I have with me my co-host, Chris Agelastos, he's going to join us here today as he typically and usually or almost always does, and kind of go
Almost
through
always, yeah.
almost always go through a few of these things. We prior to the show, we're just talking about this wonderful heat we're having here in Phoenix in the Valley of the Sun, where coming. In fact, I was up north, Chris, yesterday,
Yeah.
and driving back at 7:30 in the morning. I got back to Scottsdale, and it was already 97 degrees out.
It's so brutal. There's no good time of day this part of year.
It's unbelievable. I mean,
Yeah.
if it keeps up, they're going to break every thermometer, and then we won't even know how hot it is because they're going to have difficulty keep the. I think
Right.
the
The
thermometer right this time of year on the upside is like watching the debt clock in New York City. So
yeah, it's only going one direction.
quickly too.
Yeah.
All right. Well, let's talk about. I don't even know really. It's funny because when I was kind of getting ready for this podcast, I thought about this. We really, in all the time we've done our podcast now, I'm not sure we've ever really talked about Japan much at all because
Yeah.
everything's been, pretty well China, Russia,
hmm
BRICS and all that, things that are
Yeah.
taking place here domestically. Now what's happening in the Middle East, but Japan has been kind of a quiet, quite a quiet factor out there.
Yep.
And so let's just get right into it here. Looking at our first article from CNBC and why the US stepped in after decades to prop up Japan's yen, and this was just recent, and what's at stake. And this is an interesting story because again, as we have been talking about all these various other countries, the BRICS nations, and just all the things that have been taking place, and Japan being quiet. Here's the thing: this goes back. This is a story that really, I mean, arguably goes back, probably decades, if not a century ago. But by and large, the bulk of it into the late '90s, and where the US is, has been really actively at work with, as I say here, kind of propping up the yen. And what's changed or what's happening now is we've recognized that we have a problem because as their economy and their currency is struggling, the concern is that how basically we have been propping up the yen was through our US Treasuries.
hmm
And if they financially get themselves into a tight spot, their way out of that, probably their best way out of it, unfortunately for us, would be to start unloading treasuries. And this is not China's already been doing this at a record rate or pace. We cannot afford for Japan to do this. So it's not why the US stepped in to help Japan. Well, they don't say help, so I should correct myself. After decades to prop up Japan's yen, this is a self-preservation move, but it
Yeah.
speaks to, really yet again another glaring vulnerability that the U.S. has, and even with the recent intervention, this is probably not something that is sustainable. Meaning, like this will help in the near term, but the United States can't continue to do this at the level they need to in order to do what Japan needs.
Right. And this really shows how interconnected a lot of the economies around the world really are. Obviously we have our own problems with the dollar that we have been talking about pretty extensively over the last couple of years. And this just goes to show that we have things to worry about that aren't even our doing. We have to worry about Japan and what's happening with their currency, and are they going to have to offload a bunch of dollars, which would hurt us? So it makes more sense for us to step in and help. Yet they also talk in here about how what's specifically unique about this situation is that apparently the US is unloading euros rather than US dollars to purchase yen. So again, our dollar is kind of precariously perched right now. We don't want to unload more dollars. We don't want Japan to unload more dollars. So we're unloading euros. It'll be interesting to see what the effect of that is. If the dominoes are going to cause some problems now in Europe with the U.S. unloading euros to help Japan. So there's a lot of these interconnected relationships, and it's hard to say exactly how it's going to play out. But they are saying from the beginning this is just a starting point. This isn't going to fix Japan's problem. So we're probably going to be talking about this again in the future. Depending on the moves Japan makes from here. Hopefully they do some things to get their ducks in a row. But I don't know. And if recent history is any indication, it seems like everybody's just doing what they can to sweep it under the rug and pray for another day, hope another administration has to deal with it. Maybe.
Sure. Well, and then this second article from CNBC as well, it titled "What the Market is Saying About the U.S. Intervention to Prop Up the Yen," and it really kind of just gets into a lot of the points you just hit on there, Chris. Where at the end of the day, here's the issue, or here's what's at stake: is you've got
Mhm.
these various countries out there that they as the U.S. Take for instance the U.S. selling off euros in order to help the yen. Well, by doing that, what you likely are going to spark is a weakening of the euro. And if European nations are not in favor of that, that's going
Yeah.
to in turn cause them to start having to,
Maybe
maybe do
unload
things a little
dollars.
different. Correct,
Yeah.
correct. And
Yeah.
again, it just speaks to the domino effect that is constantly out there, and just a matter of
Mm.
time before unfortunately someone may knock that first domino over, and then we see the whole chain set in motion. But the bottom line is that as this dynamic is taking place, and again, we're talking here about Europe and Japan, which, keep in mind as well, Chris, I know you know this, but these are two countries that are country, let's say countries represented, that have really not been part of the whole BRICS movement.
Yeah.
So you've got all that stuff happening with BRICS in the US dollar, and BRICS nations unloading the dollar. And again, a silent factor out there has been Japan and European nations as it pertains to BRICS. But look what's happening here: this same problem, this same vulnerability. And it only speaks to the fact that, see, the challenge for the United States of America: we are the greatest debtor nation in the history of mankind. And so, when you are in the level of debt that we are in, and this stuff is going on,
Yeah.
there has to come a point where something's going to give, and you don't want to, when something finally gives, to be that detonation out there, because that puts you in a very vulnerable state.
Yeah. And even if Japan wants to do the right thing, right? Or I guess the right thing being, something that would be positive for the U.S. since we're going in and helping them here. How much control are they really going to have over it? I mean, already even this action here hurt their stock market. It was good for their currency; it strengthened it, but the stock market is struggling a bit in Japan as well, because while their currency is stronger, it makes Japanese exports more expensive, and so that can cause trade issues, right?
Right,
And so
right.
there's so many different things that are intertwined here. It's just not quite as simple as saying, okay, Japan needs to increase their interest rates to get inflation under control, stabilize their currency, be more responsible with their spending. There's a lot of different things here. It's like they're juggling a lot of balls, right? And if they start focusing on one, they may miss another. And so it's really, I mean, obviously, I think people understand that international economies are complicated. This isn't an easy thing. There are a lot of variables, and it's really hard to say how it's going to play out, and what other things are going to be affected. But it's going to be interesting to watch, because this is something that you pointed out that we really haven't had to pay attention to for a while. And unfortunately, it's trouble that's been brewing in the background, and now it looks like we're going to be forced to deal with it.
Yeah, for sure. Well, ladies and gentlemen, there you have it. And this is why, again, the podcast is entitled Secret War on Cash, because there is a war that's taking place beyond any one of our control. It's just a matter of understanding what's happening so that you can be better prepared to maybe help protect or prevent from what could be some devastating repercussions or losses that could be a direct result of this. So, if you'd like some information on how to better hedge or protect yourself through gold, silver, or tangible assets, and if you haven't already received a copy of our report, The Secret War on Cash, you can do so by calling or texting at 1 800 289 2646 or visit us online at www.swissamerica.com. You'll see both that number as well as the website in our show description that you can just click on there. Have a great rest of your day. Chris, thanks for the information. We'll talk
Yeah,
to you real soon.
thanks.